question on a calculation of our present value. That is the net present value. So our question reads, Rambo Dry Cleaners render services of washing and ironing clothes to their community. They've supplied the following information with intention to buy a new machine. The purchase price of machine TX is 250,000 rands and machine TB is 230,000 rands. The estimated rate of return is 12% for machine TX and 14% for machine TB. And the following figures show the estimated future cash inflow that the machines are expected to bring. So we've got a table that we have for expected future cash inflows for machine TX, and also we have a machine TB. So different inflows do we have here from year 1 to year 5. So we are also given two tables that we have for the factors. So it is that following factor table must be used when answering the question. So obviously, in the first table, we are going to have the factors that are going to apply when we have got different uh, cash, different inflows that we have for different years. For example, if you refer back to the inflows that we have, you see that for Mission TX, we are having different future cash inflows that we have for year 1 to year 5. So this is going to apply for the first table that we have. Then if you look at Machine TB, we have the same cash inflows for year 1 to year 5. So it means we are going to apply the table 2. So basically, that's what we have. As we see that table 2 has got accumulated factors that are being shown in each and every column depending on the rate of return. So this is what we have. And then on the correct part is this calculate the net present value for both machines. So on the calculation of net present value, we are going to calculate for both machines. Of course, we have machine TX and machine TB. So we're going to start on the calculation of machine TX, whereby we have our answer section, whereby this is our answer section for machine TX. We have already figures being entered there, whereby estimated future inflow for machine TX year 1, we have 65,000 being indicated is the inflow for year 1 is here, we've got 65,000. Then for year 2, we've got 55,000, which we have here, which is entered for the second year. We go for the third year, we have 50,000, which we are seeing is indicated as 50,000. And we go to the fourth year, whereby we've got 45,000, which is being indicated here as 45,000. We go to the fifth year, whereby we've got 53,000 being indicated again as 53,000. Then in terms of the factors also, we are going to use the basis of the rate of return. Estimated rate of return of TX is 12%, as having different cash inflows in each and every year. So if you go here, you'll see that 12% is going to be in this column, which is at the table for different cash inflows for each and every year. So we are saying for year 1, we've got a factor of 0.893, which we also have as ended as 0.893. And then for year 2, 0.797, which we also have here ended as 0.797. We go to the next part whereby we've got year 3, 0.712, which is also ended as 0.712. We go to the next part, which is 0.636, which is for the fourth year, which is indicated also for the fourth year, 0.636. Then lastly, we have for the fifth year, 0.567, which is also indicated 0.567. Then in terms of the present values, we are going to multiply the estimated future inflows times factor, then we get the present values. So if we say 65,000 times 0.893, we get 58,045. For the year 2, 55,000 times 0.797, we get 43,835. For year 3, 50,000 times 0.712, we got 35,600. For year 4, 45,000 plus 0.636, we get 28,620. For year 5, 53,000 times 0.567, it gets 30,051. Then we need now the total value of inflows, total present value of inflows. We're going to add all the present values from year 1 to year 5. That is 58,045 plus 43,835 plus 35,600 plus 20,620 plus 30,051. Then we get a total present value of inflow of 196,151. So of course, we have to also include our investment in assets. So if you refer back, you'll see that for machine TX, the investment that we have as indicated is 250. The purchase price of machine TX is 250, which is the investment. So this is the same figure that we are supposed to put here as 250,000, and it has to be a negative. Remember, the investment is an outflow. So we show it as a negative. So to get the present value, we are saying now the total present value plus the investment in asset. If the investment is negative, in other words, we are saying 196,151 minus 250,000, and then we get the net present value, which is 53,849. So we have got 53,849. So this becomes the present value of machine TX. Of course, we also need to go to machine TB. Machine TB, if you refer back, you'd see that it has the same cash inflow for each and every year. So we are not going to include each and every year. We're just going to include the 70,000, which is indicating the same estimated future cash inflow. So in our other section, we are saying we are having estimated future inflow is 70,000. Then the factor we are going to use the factor that we have in the fifth year, which is 3.433, which is this one. This is the factor that we are going to use. So if we had 3 years, we are going to use 2.322. So this is exactly as we are going to apply it. So we take 3.433. So we come here, we have got 3.433. Then for the present value, we are now saying 70,000 times 3.433. Then we get 240,000. Then for 240,000, this is also going to be the, we try to see, get 240,310, sorry, 240,310. So we have got 240,310. And this is also going to be the total present value of inflow, which is 240,310. So you're going to have the same figure as the total present value of inflow. Then investment in asset, we refer back to the question. We see that for machine TB, it was 230,000. The purchase price of machine TB is 210,000. So this is going to be the investment. So we've got 230,000, which is obviously going to be a negative. Remember, the investment is supposed to be shown as a negative. Then obviously you're going to now say 240,310 minus 230,000. 240,310 minus 230,000. Then we get the net present value, which is going to be 10,310. So basically, this is the calculation of net present value. Thank you for listening, and I will just meet again in the next video.